When beginners enter forex trading, one of the first things they hear is technical analysis versus fundamental analysis. And most of them rush to pick one side just because they somehow believe that choosing the right analysis method will make them profitable. And this is exactly where the first mistake happens. So what is technical analysis? Well, it's all about understanding price behavior through charts. Instead of asking why the market moves, it focuses on how prices have moved in the past. Traders study patterns, trends, support and resistance levels, and various indicators to anticipate future price movements. The whole concept of technical analysis is pretty straightforward. Price often repeats certain behaviors, and by carefully reading charts, you can spot these recurring patterns. Essentially, charts provide a roadmap and show the structure of the market so that traders can make informed decisions, not assumptions. However, fundamental analysis takes a broader perspective. While technical analysis looks at charts, fundamental analysis examines economic and financial factors that drive markets. This includes interest rates, inflation, employment reports, GDP growth, and global news. By analyzing these factors, traders can understand the underlying strength or weakness of a currency or asset. Basically, fundamental analysis is less about timing entries perfectly and more about seeing the bigger picture of why the market might move in a certain direction. So now the question is, how do beginners misuse them? With technical analysis, the common mistake is overloading charts with too many indicators while hoping for instant results. Instead of learning price behavior and trends, beginners start to focus on random patterns or quick fixes and count them as guarantees. On the other hand, beginners often use fundamental analysis the wrong way by jumping into trades based on news alone. They see a headline and act without considering the timing, overall market mood, or the bigger economic picture. Well, one of the biggest misconceptions in trading is thinking that technical and fundamental analysis are in opposition. In reality, they answer different questions. Fundamental analysis explains why the market may move, while technical analysis helps determine when to enter or exit a trade. You should never treat technical and fundamental analysis as rivals. Remember, they complement each other, and using both will make your trading smarter. So rather than choosing sides, beginners, even experienced traders, should focus on building a balanced foundation. Ultimately, analysis is not the problem. The real issue is misunderstanding their purpose. When you stop trying to predict the market and instead use analysis as a guide, trading becomes more structured and controlled. So share your thoughts with us and let us know if you have any say on technical and fundamental analysis. Catch you on the next one.